Many farmers, ranchers, and small business owners across the country are eyeing new trucking regulations that will go into effect later this year. Sarah Mock talks with an Oklahoma farmer about why he's in Washington advocating against the change.
As farmers across the country are starting to get out in the fields and do some harvesting this fall, another group of farmers have come to D.C. this week to address some issues here on the Hill with their congresspeople. I'm joined this morning by Randy Gilbert, an Oklahoma farmer who's come to D.C. Randy, could you talk a little bit about why you folks are in town this week?
Yes, thanks for having us this morning. We actually up here with American farmers and ranchers from Oklahoma, and we came this week to visit with our delegation about the the situation for agriculture across the United States and the Farm Bill specifically. And also we talked about some trucking regulations. We talked about some career tech funding.
Let's dig in a little bit on some of these trucking and transportation issues. Obviously, a lot of farmers also have kind of logistical businesses trucking. What's the ask? What are you talking to congressmen about specifically?
This year, there's some regulations that go into effect on December the 18th that require all the trucking companies to have an electronic log in their truck, which is kind of a one-size-fits-all regulation for the trucking industry. Kind of puts all of the drivers on the same schedule as far as their start time, their work day, those kind of situations. And we've just asked them to either modify the regulation. Certainly it would be good for us if the president would ask to repeal the regulation, maybe put some stay into it.
We always like to check in as well. How are things going back in Oklahoma, on the farm, in the business?
Things are going relatively okay in Oklahoma. We had some late summer rains to kind of help for our operation of beef cattle, and cattle prices are okay. Certainly the trade agreements that are being kicked around were monumental for us. Things are okay in Oklahoma. The country's green and cattle are fat, so we're relatively pleased with what's going on in Oklahoma.
Good, and hopefully no effects from Hurricane Harvey that are lingering in Oklahoma.
No, we really expected to get some of those rains from that, but we missed those. But our people in Oklahoma have been very responsive to the needs, and certainly the ag community's been very good to the victims of Harvey, and then now what's going on in Florida. So, we're all about our friends and neighbors. So.
Absolutely. I'm sure no one is surprised that ag is stepping up to help people who are struggling right now with disasters across the country. Again, we were joined this morning by Randy Gilbert, an Oklahoma farmer here in Washington, D.C. We'll have more updates from the nation's capital for you throughout the morning. Until then, back to you in the studio.
Thank you, Sarah. The American Farmers and Ranchers Group sponsors a number of youth and education platforms across the state of Oklahoma, from speech contests to leadership programs. Gilbert will be a judge at the National FFA Convention this October, which you can watch right here live on RFDTV.
Here on the Market Day Report, it's time to check out and see what's going on with this grain market. And Friday was a pretty quiet day. Today is pretty much the same. Let's take a look at the numbers here before we get to Jim McCormick at Allendale Incorporated. The corn market started out the day with a little bit of weakness. About the same thing here on the overnight trade and the day trade. Not much change. December corn down 351 3/4. Nearby March corn down 2 3/4, 364 1/2. November soybeans up 4 3/4. Coming off of some of the earlier gains at 973 1/2. January up 4 3/4 at 983 3/4. December Chicago wheat down 4 3/4, 444 1/4. December Kansas City wheat down 3 1/2 at 444 1/4. New crop July wheat down 3 3/4 at 488 1/2. December Minneapolis wheat up 1/4, 621 3/4. July down 1 3/4, 639. And December cotton up 27 at 69.34. Let's visit with Jim McCormick at Allendale Incorporated, McHenry, Illinois. And Jim, this market seems to be very, very quiet. Before we went on the air, you had mentioned that things are just kind of, I don't want to say range bound, but it's still very, very non-existent, non-exciting type trade.
Yeah, actually, John, I think you nailed it. It is range bound. We've been in a very, very tight trading range, and it looks like it could continue that way for a few more weeks till we get a better handle of what's actually out there. Just to kind of emphasize that point, these corn 4 weeks ago settled at 54 3/4. The week after that, 56 3/4. The week after that, 54 or 55 1/4, and last week at 53 1/2. So as you can see, for 4 weeks in a row, we've done nowhere in the big picture, and I think we're kind of in that same pattern near term till what's out there is determined. Remember, the trade, the last 2 reports have been thinking the government's wrong and the crop's getting smaller. The government keeps saying the crop's getting bigger, and the market right now just seems to be content, just grinding out at economic value right around 355 to find out who's accurate.
Well, the money is going to have a hard time coming back to this market, the fund money, when the market's this quiet, isn't it?
Oh, I think so, exactly. I mean, that's the good news for the producer who wants to see a higher price. The funds right now are, they're short about 120,000 contracts. They added about 9,500 last week, so they're building a little bit of a short position. If you can give these guys a reason to get out, let's say the corn yields start to disappoint as they go north. Right now, we are hearing some pretty good yields. I was just talking to a customer of mine down near Effingham, Illinois. He harvested some corn the last few days that was average pretty much between 200 and 220 bushels an acre, and that's a good 20 bushels better than what he thought the early stuff would be. This is corn that was planted right about April 20th. Now, the latter corn that he planted in May, he fears it took the brunt of the heat and the wet weather, and he thinks that could be closer to 150. If that starts to come in closer to 150, that'll get the trade's attention, and that might get that short covering that we're hoping to see to get the price pushing closer to the $384, which is what the producers are hoping for.
But, Jim, this is still early in the harvest game, and as a former producer myself, we always cut the better stuff first in case we had weather move in.
Yeah, and that's it. I think we are getting the better stuff, and like I said, that's why the market right now, we're looking for like 5-7% planted tonight, and we're stuck in a range. And I think for the producer, I think unfortunately that's what we're going to see for another good week, 10 days till we get a little bit better handle of what's out there. Okay,
real quickly, we got just about a few seconds left here. Is anybody watching that soybean planting progress and weather conditions?
Well, right now, I think they were keeping a very tepid eye on it. It's a little bit too early to get worried about dry weather in Brazil. That's get a lot of trades hype right now. They tend to get rain in the latter part of September into October. Then they hit the planting hard. We hear this dry weather every year, and every year it usually doesn't come out, but it's something we need to watch. If they do struggle, that only works well in the U.S. producers, for the U.S. producer, plain and simple.
Okay, Jim, hang on with us, and we'll be right back. We'll check the livestock coming up next. All right, the new cutout information was out just a little bit ago, and we've got that information. Let's pop that up here before we get back to Jim McCormick at Allendale Incorporated. The beef cutouts and the pork cutouts both showed some signs of strength. In fact, beef was up 210 on that select. The choice up $1.25, 192.67. Pork cutouts also basically higher most all the way across the board. The carcasses, the loins, in fact, those carcasses gaining 130. But look, the belly market up 474 today, 106.37. Jim McCormick, Allendale Incorporated, your thoughts on these cutouts? Is this going to give us, and first the cattle, is this going to give us hope for maybe that higher cash cattle trade this week?
I think it should. I mean, now granted, this is only the midday. We got to see, the close strong here at the end of the close today and maybe the next couple of days. But yeah, I think it's a good sign. The market, the retailers, if you can see them coming in buying, that's going to give the packer, the buyers, the packers come in here and get reason to come in here and be a little bit more aggressive and bid up on cattle. They bid up a little bit last week, so the cash market is stabilized. Get the cutouts to start working. That was without the cutouts rallying. If we can get these cutouts to rally, that should get the cash market excited and hopefully get these futures markets to push a couple dollars higher at least this week.
Continue to get the cutouts to perform. That's going to be one of the keys, and that's going to be dependent and contingent on how the consumer feels overall generally, and that goes back to the economy, doesn't it?
And that goes back to the economy. And right now, I mean, one of the best gauges for the economy a lot of people look at is the stock market. And you might notice today we're making new all-time highs, and it's pretty amazing. I've got to admit, I would not have thought the stock market would be able to plow higher with some of the terrorism aspects and what's going on in North Korea. But the market seems to have taken that all in stride. We're making new highs, and that's just pulling more and more money into the market. As we speak, the gold market's making new lows for the day. So it looks like you got people dumping money out of some of their risk assets. gold primarily and plowing it right back into the stock market.
Well, here about a week.
Should be bullish for the beef in the long run.
Exactly. Here about a week and a half ago, that VIX index had hit I shouldn't say an all-time low, but a short-term low. Obviously, the market was relatively confident, and as long as we keep that at a low level, could that also spur some of this fund money to get shaken loose and brought back to the broader commodity sector?
Oh, I think so. I think that should help a lot. I mean, the fact is commodities in the big picture are relatively cheap. Actually, I think what I'm hoping for is to see the stock market correct a little bit and maybe, it's massively overbought and see some of that money go, hey, look, that's buy value. Corn's cheap. Beef looks relatively cheap compared to where it was just a few months ago. And, that's what we want to see. Cheap prices cure cheap prices. The dollar in general is trading, 2.5-year lows, and that should bring investor money into the commodities by historical, looking back historically.
Jim, can you put that hog market into that category also?
I think you can't put it in the hog market. Right now we're struggling a little bit of oversupply, but yes, I mean, if you can open up, China is a huge producer of hogs. They're a huge consumer of hogs. There was a report out today that China hog production was down about 8%. And we can open up some trade agreements with China and get them to buy our hogs. They just started buying our beef recently. That's good. I mean, that's demand that we want to see. And like I said, the dollar's cheap. That'll get international people to say, hey, I can buy it cheaper than we can produce it. And that's always good for the American producer.
All right, Jim McCormick, our guest. Jim, thank you very much. Let's run through those numbers before we go back here to the break and to more agriculture news here today. Right now, live cattle, and this is a market that started out the day with a little bit of enthusiasm. October up 45, 108.20. December up 73, 113.55. September up 121. This is on the feeder cattle side. October feeders up 167 at 152.32, and October hogs down 40, 60.58. December hogs up 7 at 58.55. And that's where we stand so far. We're going to continue to keep a sharp eye out this afternoon for the crop progress report as well.
All right. Thank you once again, John. Appreciate it.
Thank you.